It's about that time of day again. My name is Joseph. It's Tuesday evening, July the 11th. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX tonight. Crude is bullish after a very strong spike higher to finish today's session, telling us to look for one of four possible scenarios ahead of tomorrow's inventory report. The S&P is bullish with a spike in channel tonight, telling us to focus on traps and failures below those prior swings with a target back up to retest the measured move. The euro is bullish with a spike in range, which tells us to look for buying opportunities using seller failures below the range or a possible breakout pullback to new highs tomorrow. The FDAX is range bound and trying to finish the pendulum swing, which tells us to use the 2-try rule, focus on failures, and grab those range highs and lows tomorrow. We have a bunch of strength in the market here tonight. Pretty much all the markets are operating off some sort of strength moves. We got some spike in ranges, spike in channels, spike in wedges, got a bunch to talk about. And of course, we got Yellen on the microphone testifying in her 2-day testimony tomorrow. Got a great newsletter in store for you guys and gals tonight. Before we jump in though, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog for the full-length version with all 5 markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the newsletter goes live. Follow me on my many different social media channels, everything from StockTwits to Twitter, right, Facebook and LinkedIn. Whatever your favorite flavor is, follow me for links, charts, and updates throughout the week. Don't forget to grab those charts. One of the most popular parts about my nightly newsletter is the fact that you can download those charts and have them ready on your computer for tomorrow. And please don't forget, if you're not an advanced member here at School of Trade, you're going to grab that free pass in the upper right-hand corner. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I want to give you a reminder, grab that free pass before you finish up watching this video here tonight. Guys and gals, excellent week here so far. We're expecting to see some volatility today ahead of tomorrow's testimony here from our gal Yellen. That's definitely exactly what we got. Let's check the news here tomorrow. Put this plan together. Tomorrow is hump day, of course, Wednesday, July the 12th. Boy, this week is just flying right by. Most important thing here for tomorrow, 2 things. Well, the most important thing is going to be the fact that we're going to be interrupted tomorrow morning from my gal Janet Yellen. This is her 2-day testimony. The first day will be the most important because that's where she reads her pre-prepared statement ahead of time, and then of course she goes in front of Congress, right, and gets grilled by the committees, right, that are put in front of her. So we know tomorrow 10 a.m. we're going to hear her read her prepared report. So not much is going to be unexpected on that. But really the big stuff comes out an hour later, right, when she gets grilled in that live Q&A. What you want to be aware of tomorrow is usually when Miss Yellen testifies, it's going to be a brief slowdown, and then as she transitions into her live Q&A, traders start to interpret what they said or what she said earlier, and of course we start seeing markets kind of get back to normal. So expect an initial slowdown, but it should start getting back to normal here right as we get closer to the lunchtime hour. So be aware of that tomorrow. Get in early, get out early, let that slowdown happen, and then look for that kind of tail end of the morning into the afternoon, right, as markets start to come back to life, right, as they digest and of course, right, interpret and react to, right, what was said earlier on. So tomorrow, first of 2 days, and then of course, I would be remiss if I didn't, of course, also mention the petroleum status report tomorrow. That, of course, is the big news for crude oil traders. We had the API report this afternoon that's sending price higher on crude right now. Tomorrow at 10:30, we get the petroleum status report. I know we're back to normal now after a couple of weeks of Thursday inventory reports. We're back to that normal Wednesday at 10:30 a.m. So my rule of thumb on Wednesdays for crude oil trading is always cut off at 10:15. Right, so 10:15 a.m., that's my hard cutoff, and then I always give it 5 minutes after the news comes out, and then we start watching to see once things start slowing down. The inventory report's usually a pretty dramatic move. I'm not a big fan of gambling my hard-earned capital away on the actual news itself. It's extremely dangerous. I do not recommend trading news, but give it a few minutes after the news comes out. That should give you some time, right, to let this market calm down a little bit, and then we can get back, right, to finding the most reliable patterns in our trade room tomorrow morning. So 10:15, and then again 5 minutes after. Now, one more thing about the petroleum status report, the inventory report tomorrow. I have some support and resistance levels for you guys to use in your trading day tomorrow, or along with me tomorrow in the trade room. If you want a copy of all of these support and resistance levels, you can follow me on Twitter, Facebook, StockTwits, right? I sent all those out about an hour ago. So if you follow me on social, you already get all that stuff in your inbox, right? If not, just scroll below the video tonight. There's a link that says click here to read more. Follow that link that says click here to read more, right? Keep scrolling on down and you'll see that data right there. You'll see all the levels, right? Those support and resistance levels are there for you. It takes a little bit of effort. Just scroll down below the video at Sideways Markets. Click on that link that says click here to read more, right? And you'll see those support and resistance levels are listed there for you so you can use them tomorrow. All right, guys? So early in, early out tomorrow ahead of Yellen. Don't be surprised if things slow down pretty quickly as she starts around 10 o'clock, but they should start to break out, right, as we start going closer to 11 o'clock, 11:30, once she's done her pre-prepared, right, statement. Don't forget the API report tonight leading into tomorrow's inventory report on crude. And that's about it. I mean, we get the beige book tomorrow afternoon, but I don't think we're going to see much of a movement from that. I think the markets will probably be a little bit beat up after, right, Yellen testifies. And then again, we're going into that, right, tomorrow, not tomorrow, but Thursday, right, the day after that as well. So Wednesday, Thursday, 10 a.m. Tomorrow should be the most dramatic, right, because she's usually repeating herself, right, on Thursday of what was already said on Wednesday. You get the point. Don't forget, I'm going to be with all of my clients tomorrow inside of our trade room, opening up at 8 o'clock Eastern time. Don't go at it alone. Come out and join me as a brand new advanced member. Let's jump right in here, guys. We got crude, S&P, gold, euro, and DAX tonight. Let's jump in with the oil market here tonight. Crude is bullish and most likely considered just a little bit overbought. Who is buying up here right now? This is probably sellers taking their profit more than anything else. So a little bit overbought here right now. I hate to use the word overbought, but I mean, I'm not sure anyone's going to want to buy up here right now. So we're ahead of tomorrow's inventory report, which tells us, you know, this real strong spike, and you're going to see a bunch of these strong moves, right? The key word here today is strength in this nightly newsletter, right? You're going to see a lot of these strong spikes. Well, this clearly is a strong spike. And this really tells us to look for one of four scenarios tomorrow. The plan is to look for either a spike in channel, a spike in range, a spike in wedge, or a possible flag pattern going to tomorrow's session. Now, the bulls have clear control, but we don't want to chase this move higher with a goal of waiting for traps and two-legged pullbacks to focus on buying low tomorrow with a target going back up to retest the high. So as we zoom in on this chart, once again, you can find all of these support and resistance levels right below the video tonight. Just scroll on down, follow that link that says click here to read more, right? And you can get more details on that. Or you can just copy them down right now and you can write them down on your own. Now, most important thing right now is this real strong move up. Now, anytime we have a market that makes a real strong move higher, our goal is to wait for a pullback, to buy low, and then get a retest of that high. That is, in the most reliable sense, that is the most reliable way, the most dependable way that you want to look at a spike. When a market spikes higher, I know, we all want to jump in and just chase after the move, but that doesn't make for a successful long-term career. Human beings have a bad habit. It's human nature. It's almost a natural reflex for human beings to want to buy things that are going higher. And it all comes from this fear of missing out, right? We're worried it will keep going higher without us. And a lot of times it happens so quickly that we use our level 1 thinking, right? Not our level 2 thinking, and we just jump in, right? And we end up buying the high of the day, or we end up buying the high of the move. So right now, a real strong move up. And what you always want to remember is the goal is to not chase the spike, stay a little bit patient, wait for it to pull back, and then retest that high. Now, we're going to see a lot of these tonight, this, of course, being on crude oil, but that's the basic principle of what we're trying to do right now. It's very simple. Wait for a pullback, and the target is back up to retest the high. Now, in all reality, there are four basic situations that really piggyback off of this strength and will tell us more of what our plan is going to be tomorrow. Now, first of all, strong move up, pull back. We want to go back to the high. Scenario 1 is a spike and channel. We go back up, we make a new higher high now. Then that new higher high pulls back. We can then use that new higher high, draw a bull spike and channel off the high, connect it down to that low, and the goal is to buy the dip down around the low of that channel, possibly even a little bit lower, right? Down around that prior swing, right? Buy that dip to go back up to retest the high. Again, buying low, going back up to retest the high. That's the first scenario, right? Spike and channel. Now, second scenario, up, we pull back, we make a new higher high now. We pull back off that new higher high, we draw our trend line over, but now instead of pulling back to form a spike and channel, what ends up is it goes back to retest the high. Now that spike and channel isn't really working, is it? Now what we're going to do is we're going to call this a spike and wedge, right? A spike and wedge. We're going to see one of these, right, in just a moment later on in this video. Now on a spike and wedges are a little bit more complicated. First of all, the target is at the vertex, right? Where those two trend lines come together, that's their target, and it's really rock solid resistance. And what I want to do is, on a wedge, because it gets really narrow inside that wedge, what I really want to focus on is, unlike a spike and channel where you'd buy the low of the channel, with a wedge, I want to focus on those prior swings, get this market down, up, right, with the target up at that wedge, right? That'd be a spike and a wedge. Scenario number 3 tomorrow. Strong move up, remember, pull back, retest the high. But in this case, instead of seeing a new higher high, we see rejection of that higher price. Price pulls back. Now that tells us we're looking at a spike and range. The third scenario is a spike and range, right? No higher high. That's the key, right? The key here is it doesn't make a new higher high, or it does, but it immediately gets rejected right back down. Now, when that happens, we have a trading range, and anytime we have a trading range, we now know rotation back down to that low, right? Rotation from the high to the low to the high to the low, right? So expecting back and forth rotation. Buy low, don't sell high unless you're taking profit, right, on the buy off the low. It's a bull market. I don't want to sell the high of this range. There are two ways to trade it. First, 2-try rule. 1 try out, 2 try out. Sellers try twice to break the low. They fail. We look for the buy off the low, right? 2-try rule, focus on failures, buy the low of that trading range. What's the second one? The second option is we go through the high, nice strong move through the high now. Most traders like to look for a pullback, to buy a pullback to the high. I don't trust that, right? That may have worked 10 years ago, but it doesn't work very well in today's liquid markets. I look for a 2-legged pullback along with a trap low. I call this a fake out breakout pullback, right? So it's a strong move up, not the first pullback. I know that's what they tell you in most trading books, but I'll tell you right now, it's tough to find a successful trader that would put all of his life's work, right, in a book that can easily be mass produced, right? That doesn't sound like a very smart idea, right, for proprietary trading strategy. So be careful about what you believe and what you use in those trading books, right? You want to really let the market be your best teacher, right? That's what I've always done, and I think that's going to be the best way for you as well, right? So be careful what you read in the old trading books, right? Markets always evolve, and as of today's price action, right, you don't want to be buying, right, that breakout. So a little 2-legged breakout, right, a little breakout pullback, 2-legged pullback, right, a little trap low. Now that was the third scenario. What's the fourth scenario? Again, all based on strength, all based on strength. What's the last one here? Fourth scenario, strong breakup, pull back, retest the high, but now they can't retest the high. Ooh, now what do we do, right? Now it's a lower high. Well, now take that trend line, draw that trend line over. Remember, the big deal here is they didn't retest the high, right? Boy, we've covered a lot of very, very good information in tonight's newsletter. I hope you guys learned something and hope you use it to earn something tomorrow. Don't forget, if you want to learn more about the trading strategies we teach here at School of Trade, we get a great free trial on the homepage of our website. If you're watching this video on our YouTube channel, there's a link in the description of that YouTube video. Follow that link. Come to the website at schooloftrade.com and join our free trial to learn all the details. While you're here, don't forget, I have a place for everyone. Whether you're brand new or whether you're a grizzled veteran still trying to find consistent profitability, I teach and trade this strategy every day in our trade room, and I would love to help you along the path to success as well. Got any questions for me? Great. Hit me up on live support on the right-hand side of the website. I'll be sure to get right back to you, right, and answer all your questions as well. My name is Joseph. It's great to meet you here for the first time. Thanks for stopping by on the nightly newsletter. Don't forget to tell a few friends about this. I'm sure you know other folks that would like to learn these great strategies as well. And don't forget, you don't need to do it alone. Come out and see me tomorrow as a new client. We open up our trade room at 8 o'clock Eastern time, and I will see you guys same time, same place tomorrow. Be well out there, okay? Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.